What is going on, guys? Good morning. It's your favorite mortgage lender, Abdel Kouatmi, Got Mortgages. We have got quite a bit to talk about. We're going to go over specifically what is the expectation when we looked at the market. We obviously know that annual inflation has been slowly ticking down. PCE report came out and actually showed that numbers were coming in slightly lower than expectations, which is great. Is this a target? We're slowly getting closer to the Fed's reach of 2%. So let's get right into it. We know that the Federal Reserve's, again, preferred measure on inflation, PCE, getting closer to that 2%. Let's kind of see where we're at. So headline came in at 2.1. Core is at 2.5. Remember, we want to take a look at the core. So slowly getting there. Headline jumped up only 0.1%. Core roughly the same. If we look at the last 12 months, again, we're at that consistent 2.5% mark. Good news, again, when we look at that inflation mark, once again, is down annually to 2.1% on the headline number. Shelter costs being a very important component, obviously, making up a big portion of it, 18% of the core, slowly getting to that 2% mark. PCE, again, one of the major parts that we look at this is rental conditions, along with the inflation numbers slowly starting to improve. Why is this so important? Again, monthly figures for core PCE for May to December actually show that it was relatively much lower relative to January and February of this year. Home prices, again, a slight downtick month over month nationally, right? Remember, some certain areas, like on the East Coast, still super hot. And now that we're going to head into the summer, it's going to get even hotter. Month over month, we're up 0.8%, year over year, 3.4%. Again, this is according to Case-Shiller. We do know, once again, that the FHFA also showed very similar trends, up 3.7% year over year. Again, remember, it doesn't include jumbo loans or cash purchases, which is important for us to know. Limited supply, steady demand of homes continues to push prices higher across a lot of these areas. $600,000 home, again, appreciating at 4% annually, builds $24,000 in equity in 1 year. Pending home sales, as you guys can see here, slow downtick, down 2.5% on a year-to-year basis. Current pace, again, showing 4 million homes. If we really do a deep dive in there, we're really not seeing those higher home price sales, right? Which is important for us to look at. First quarter GDP, second estimate, again, for the GDP, contracted minus 0.2%, which is better, obviously, than the revision of 0.3. GDP, once again, continues to serve that economic health scorecard that we take a look at. Important for us to look at when it comes to imports and exports, obviously, where it's produced. Continuing jobless claims, once again, at 1.91 million, the highest that we've seen since November of 2021. Once again, continuing to show the patterns that people are having a hard time finding a job after they are significantly let go, or it's really a combination of employers not hiring or economic uncertainty when it comes to tariffs in the market. Later on this week is going to be the big employment data, right? We're going to get updates on ADP, job opening and labor turnovers, and private payrolls. Will the private payroll really BLS report kind of come out with the BS numbers, or are we going to really see some of the important triggers of what we need to show when it comes to employment market? So a lot of things to cover. So obviously we're going to continue pushing through. Keep you guys updated as they go in and take it from there. Thanks for tuning in, guys, and I'll catch you guys next time.